Following a volatile week for global markets, shares in Asia-Pacific traded mixed on Monday. Markets in Japan, India, and Singapore are closed for public holidays. Mainland Chinese markets bounced back from the previous week's losses to close higher on Monday. The Shanghai Composite traded up 1.45% to close at 2,814.99. Australia's benchmark S&P ASX 200 retraced some of its early losses to climb marginally higher to 6,590.30. In South Korea, the Kospi clawed back losses to rise 0.23% to close at 1,942.29. Overall, MSCI's broadest index of Asia-Pacific shares outside Japan was almost flat. On the trade front, Trump said on Friday the U.S. is not ready to strike a trade deal with China. As a reminder, a new 10% tariff on additional $300 billion worth of Chinese goods is due to go into effect beginning September the 1st. The two countries are set to resume trade negotiations in Washington in early September. Against the backdrop, global investors continued to keep a close eye on the yuan after China's central bank fixed Monday's yuan midpoint at 7.0211 per dollar. It was the third consecutive session where the People's Bank of China set the official reference rate weaker than the psychologically important 7 yuan per dollar level. European stocks closed lower on Monday as investors monitored escalations in the US-China trade war. The Pan-European Stock 600 closed provisionally down nearly 0.3%. Banks were the biggest fallers, while chemical stocks were the best performers. Elsewhere, the Argentinian peso sold off steeply Monday after the country's center-right president Mauricio Macri performed poorly in primary elections. The currency slipped more than 30% to a record low after early official results showed that Macri lost by a far greater margin than expected, casting serious doubt over the incumbent's re-election chances in October. U.S. stocks were on the defensive on Monday as bond yields resumed after August's downturn, raising concerns about the state of the economy. The 10-year Treasury yield dipped to 1.63%, while the spread between 2-year and 10-year Treasury yields narrowed to only 6 basis points, near its lowest level since 2007. The Dow Jones Industrial Average fell 391 points, or 1.49%, to 25,896.44, while the S&P 500 dropped 36.21 points, or 1.24%, to 2,882.44, and the Nasdaq Composite was down 1.2% to 7,863.41. As for currencies, the Japanese yen strengthened against the greenback to 105.04, driven by safe haven demand. Euro USD continues to oscillate around 1.12, unable to make a clear break above the 100 DMA. After some recovery, the pair resumed the decline early on Tuesday. The immediate meaningful support for the common currency comes around 1.1160. In commodities, oil prices barely rose on Monday, with Brent having settled above the $58 handle. Saudi Arabia said late last week it plans to keep its crude oil exports below 7 million barrels per day in August and September to help drain global oil inventories. Also, Kuwait on Monday reiterated its commitment to OPEC Plus's supply curbs after Oil Minister Khaled Al-Fadel said Kuwait had cut its own output by more than required by the accord. However, the comments did little to drive the futures higher, though somewhat capped the downside pressure. Meanwhile, gold prices hit fresh multi-year highs on Monday, resuming the rally after a break late last week. The bullion extended gains to the 1,152 area and remains elevated early on Tuesday as investors continue to express concerns over global growth and trade wars. Considering the lingering risks, the precious metal could extend the rally despite overbought conditions. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.